Hi, I'm Jeff Hirsch. I'm here at the Money Show in Philadelphia with Richard Howe. He's the CEO of Stock Spinoff Investing, of course, stockspinoffinvesting.com. And you were telling us the outperformance because the companies are incentivized, they own it, and they usually get sort of dumped once the stocks get spun off. Give me some good examples of big wins and some that haven't worked out so good, and maybe a couple that you're looking at right now.
Yeah, of course. I'd say my biggest winner is a company called Liberated Syndication, and this was a super small cap name, a micro cap company.
That was the spun off company, or that was the parent?
That was a spun off company.
Okay, and it came out of what?
It came out of a company called Fab Universal, which was focused on media, selling media in China through kiosks. So it was a very unique, small situation.
Interesting.
But the interesting part about it is the spun-off company was a hosting company for podcasts. So I don't know if you listen to podcasts. I listen to a ton.
A little bit. My wife does more than me.
But they're in secular growth. So the podcast revenue, people listening to podcasts is growing at 20% per year.
Sure.
And this is a really high margin business. And because this was a spinoff and it was a really small cap stock, I was able to find that one when it was trading about 3 times earnings.
Okay.
And so that one is up many-fold since I initially found it. So that's a winner.
So that's a couple 100% gainer?
Exactly.
Okay.
Yep.
Give me a loser.
Yeah, so a loser, we all have losers. So unfortunately,
if you don't, you're lying.
Exactly. So unfortunately, there have been some pretty attractive, or what I thought were attractive, spin-off opportunities in the energy space.
Okay.
And anything in the energy space has really gotten crushed recently. So KLXE Energy Services is a spin-off. It's an energy services company
Who spun them off?
So this was spun off by a company called KLX Inc., which was acquired by Boeing, an aerospace company.
Okay.
They also had a division in energy services, so that was spun off. The whole market has gotten crushed. There's been incredible insider buying at KLXE, and it's incredibly cheap.
How much is that down?
That is down 60%.
You're out of it already?
I'm in it, so I bought more.
Oh, you bought more?
Yep.
So you're doubling down.
So that one's a loser, but I still like it.
Okay.
Yeah.
Sometimes the market does sink some ships, but now give me something you're looking at that people might want to consider going forward. Anything that's just spun off that looks good, or about to spin off something?
Yeah. So my favorite thing to look at are opportunities where a big company is spinning off a small company, because like we talked about, the index, the ETFs that track the index are forced to sell to smaller players. Exactly. So one of the companies recently, VF Corporation, is a big S&P 500 company. Their key brands are Timberland, Vans.
All the shoes.
Shoes, but also the North Face brand. They do up-and-coming, kind of growing brands.
Good brands.
They spun off their Wrangler and Lee denim brands into a new company called Contour Brands. So we did our work ahead of time, recognized that this was a great company that generated a ton of free cash flow and is defensive. People are going to wear jeans in recessions and in good times. So that's what I like late in the economic cycle. So this stock came out at 40, sold off like crazy. Within the first couple weeks, it was down below 30. We were able to buy it and recommend it at $29.40, which had an implied dividend yield of 7.6%.
Is it still attractive? Where is it?
It is. So it's bounced back up. It's up to $34.50, but that's still a 6.6% dividend yield, and it's trading at about 9 times earnings. So it's still very attractive.
Great stuff.
Yeah.
That's good.
Thanks so much for your time.
Thanks, everybody.